kick us off.
There you go.
I have something cool. All right, I brought you guys some goodies. So I brought you a couple of buffalo nickels.
Okay.
You want to pass those down for me? And Joe, I figure you especially are going to like this.
Oh,
Brought
jerky?
you some homemade buffalo jerky.
Oh, man, you have no idea.
Yeah, what you guys would like.
Thank you.
Thank you.
Appreciate it.
Wow, how's it been going, man?
Doing great.
You guys have been busy.
Yeah, we're
A
busy.
lot going on.
Yeah, it's a busy time.
Yeah. Well, you want to kind of run through what y'all been up to? I mean, look, I've heard, obviously, we're here in Nashville. We're playing with everything that you've been doing on the accelerator side, Project FinTech, everything else. You want to talk a little bit about how that got going on?
Sure.
I mean, you had a lot in there.
I think I'll quickly can kind of mention the backstory. So being here in Nashville, I've been here since 1992. So, you know, Nashville's changed, to say. It's changed a lot. It's changed a lot. But with so many folks moving to Nashville, so many companies here, with so many large brands that have moved here. I mean, we've had headquarters, you know, or sub-headquarters from folks of the like of Amazon and Oracle, and Lance Bernstein and UBS. I mean, it's just amazing. There has been, and Nashville traditionally is a publishing from all the music, and it's a healthcare town. The for-profit healthcare infrastructure, I mean, it's just unbelievable how large it is here, anchored by Columbia HCA and then all the offshoots and derivatives of that company. It's just been so good to the city. FinTech has kind of been a backseat, which it always is. It's great, but there's been a lot of payments companies here, a lot of banking, a lot of investment banking, securities, process, and I've always been a FinTech and built my companies here. And as we know, FinTop is headquartered here. So the world has kind of developed around us, which is kind of interesting. Was approached, launched TN, which is the investment arm, the private kind of innovative entrepreneurial venture arm of the Tennessee government, had put out an RFP earlier to go after two accelerators, consumer goods, which I know nothing about, next to nothing. And by your branding, you probably don't either. Like, yeah, well, this looks good. But FinTech, it was really interesting, and you had to get a partner. They put it out, so the EC, which we're sitting in right now, the Entrepreneurship Center, Nashville Entrepreneurship Center, it's been around for a while. It's a great partnership in the city. It's a 501c. You had to have a nonprofit bid for the launch TN, and the state was putting up some money to kind of build the cohort and build it out. So we stepped in, Adam, myself, and our network, and said, hey, we would like to support this. It's a really good time. Time in Nashville, there's a lot of growth, there's a lot of opportunity, and I thought there are a lot of FinTech people here because I get a lot of email inquiry. You know, people come to town and want to meet, and boy, it was 2 to 3 times what we thought it was. It was a big universe here that was really interested in this. So we had our first cohort. We built it in and around banking because of our domain expertise and our network, and we said, you know, it's a really good point in time. We had really interesting applications come in. Not all banking. A lot of them were wealth and payment related that weren't banking, but it was great. We just kind of said, we didn't say no, we just said not now on some of the applications, and we put a really nice cohort together. Some are based in Tennessee, some are out of Tennessee, because we want to attract business here as well. And it was a cohort we put together. We're running through it. You're in town, you're going to meet a bunch of them tonight, and we're going on tour in January throughout the state to East Tennessee, West Tennessee, and we're going to take it for in partnership with the TBA, Tennessee Bankers Association. They're bringing together their membership and hosting multiple places for our cohort to travel. And it's interesting. It's been a good partnership, and so we got about a quarter left of the program.
We've talked a lot about this. I would love it, actually, both of you guys. Would y'all talk a little bit about, so your concept of taking a state association, right, going from a local community to the state, and then think about national, as it relates to banking, FinTech, and all this merging together. That world used to look, I think, a lot better, a lot more cohesive than it does today, right? I mean, certainly with M&A and everything else we've experienced, it's been a little beat up and things are a little bit fractured, and I know we hear and see that a lot from the FinTech companies. So, like, where's the 1-800 help me build something, right? I mean, all of us are now participating in this infrastructure, right? It's not what it used to be.
If you took like 20 years ago and looked at the number of institutions and the number of dollars in banking,
Okay, the number of dollars have tripled. So by logical thinking, you would think the number of institutions to handle those dollars should have tripled as well. When in fact, they've actually like more than like a third, I think, are gone, maybe more. So what we've really experienced is a transition of dollars to the larger players. And to the states, they've got less numbers of institutions, so less revenue per state. And then the nationals, well, they have their existing revenue streams, and then they have other revenue streams, but they're all experiencing the same thing. So it's really weird when you look at the power in the bodies that are able to affect change actually being weaker at a time when the dollars are bigger.
Yeah, it's a good point. I've learned a lot about the TDFI and the state of banking in Tennessee through this process. We have about we still have about 130 chartered banks, so it's a pretty large number. We also have something called the wild card statute, which is a sovereign identity, which I didn't know this. Any federal banking law or any access that a large bank has access to, you get it by default if you're a Tennessee chartered bank, which is great. It's a great opportunity for innovation. It's a wonderful moat if you leverage it. And what we're trying to do is not educate. People are very curious about innovation always. And if you look at the growth of deposits and the growth of access, growth of payments, growth of lending opportunities with embedded opportunities using technology, it is a place that you need to be curious about right now. So we're seeing great curiosity. But what we're running into is fascinating. I would say half of our cohort can't get a sponsor bank.
Right.
We're seeing it.
Well, that's back to the climate that we're talking about. This is an opportunity, make no mistake, and it is the future. And I think everybody can see that's deep involved in it. And back to the associations and their role in helping to further this opportunity zone for the bankers. First, everybody has to understand that it's not a bottomless pit of regulatory disaster. That there's opportunities out there that can be done the right way, and that we're helping to bring those right way, let's just call it the right way, or a right way, that is a compliant way, that really, really changes the fundamentals on your balance sheet. It also fundamentally changes the customers that you serve. And a lot of those customers are I hate the word underbanked, because it's so generic.
Niches, various
yeah,
niches.
A lot of neat niches of service that can be handled through FinTechs. And
Oh yeah,
like
I mean the
that.
ISVs, the specific verticals, industry-specific verticals are really interesting little niches that you just never knew existed because, banks have always been about loans, payments, and deposits. I mean,
your point about FinTechs come along saying, "Hey, I can't find a sponsor bank." That's on us, guys. I mean, when you talk about education or just we talk football,
at the
me and
same
Adam
time,
a
we're
while ago.
experiencing the M&A problems that we just talked about.
Yeah,
I mean,
we were
that's-
talking football a while
right.
ago about, hey, a new type of offense comes along, and I'll bet you at a coach's clinic, you're going to see every damn coach in the conference going to be there, right? We all
Yeah.
want to know about this. Bankers should feel the same way about FinTech and BaaS and all of that. It doesn't cost you $1 to figure it out. Go learn about it, understand it better, and then see if it applies to you. Because what we find, and Joe just nailed this, you got a zillion FinTechs out there lined up, ready to go to make you money, and they can't get in the door. That's again a mistake.
So touch on this for me. If you really had to define the major difference, when we look at all these FinTechs that we all look at, I would say it's front ends and it's marketing and probably a niche is really what they just drastically are better at than a bank. But what do you think?
Yes, but I think banks are good in niches also. Like community banks, when I think about banks in our network, 90 banks, some are great in auto, some are great in aircraft, some are great in equipment finance. They all have their little niches, and that's where they excel. And we have to bring technology to those niches and maybe bring those programs nationwide or to other similar niches.
Got it. Perfect. It fits the narrative of digital transformation, right? But partner with FinTechs and sponsor them. I think
but it's just reducing friction. I mean, guys, we've been doing this.
It's the same thing.
This is nothing new. I mean, what really kind of bothers me is that we call this a new business. It's not. This is just innovation. It's just reducing scope, increasing focus, taking friction out of the business model, And the use of technology is a very good platform to do that.
Right.
And it can be reconciled, coordinated, it can be overseen. All the things that we've had to do to any business practice we put within a regulated institution or a regulated environment.
Right. Yeah.
If I can just bring it back to the state of Tennessee, because we're in the Entrepreneur Center in Nashville. This program is sponsored by Tennessee. When we kicked off the beginning of this year, immediately the biggest challenge facing banks was deposits, and the run on Silicon Valley, and every bank was bleeding deposits with the increase in rates. And so the state wants to support the banking system, but do you know where most of the deposits for the state are? It's at Wells Fargo, it's the money center banks. So how do we build a technology wrapper so that we can actually get those deposits into the community banks, into the
I mean, that's a great
neighborhoods
point. If
around
I'm
the
paying
state?
taxes and you're holding my tax revenue and I find out it's being held in New York, because it is, it's like, guys, why aren't we putting that here? Like, let's put let's balance the deposit flow and put it throughout our 136 banks.
Yeah, this is like deja
Well said.
vu, right? You find yourself in this room where it's like, this is so weird. First off, the facilities here are fantastic, top notch. Hats off to everybody involved in that. Secondly, to answer your question, we do a program with Florida where we use our rating system, and they basically have a scoring model built into their policy. So when you bring in, they call them public deposits. This would be fishing license or whatever type of license that goes to the state and have these deposits. Well, they don't want to just put them out in anywhere, and so they want to make sure that these institutions are secure and sound. So they build their policy, and one of the things they build it around is our rating system. And that allows them to then transfer those deposits down to smaller institutions rather than just put everything in too big to fail banks.
Yeah.
And actually really helps their state banks.
Yeah. Well, one of the companies in this cohort at the Project FinTech is working on building these rails. Joe's more involved in that, but to more of a deposit sweep network for bespoke opportunities.
And a lot of it, they manage a lot of municipal funds, a lot of municipal tranches of capital and put them throughout the banking system. But, I think the other thing that's come to light in this process with the first cohort is the need, and I know 4 states have done it, Arizona, Massachusetts, West Virginia, there's one other, that they have a regulatory sandbox at the state level. And there may be 1 or 2 more, but so it's been done, it's not a first, where you embrace the accelerator or whoever's doing this. I know FinTech Sandbox did it in Boston, and they got the big purveyors of technology and service and data, and they got them to put their technology in a platform that allows these young FinTechs to be able to be in the rails and innovate and develop and ideate and create their infrastructure without having to go live, without having to go live day one, because it is not prudent for banks to go live on untested platforms, no balance sheet. I mean, there's a lot of risk there. It's great that they want to tie and they try to create their own little sandboxes inside the banks. But one thing that would be great is if we could have a regulatory sandbox, and I could see it where the Commission of Banking, Insurance, Securities, they come together here and they put together, which would be just fantastic. And we have the right state to do that.
Mm-hmm. No, it makes a ton of sense. I think when you look at we talked a little bit about the sponsor bank side, right, and the lack of sponsor banks being such a problem. If we look from the Bass Association side, we probably get, on an average week, half a dozen, up to as many as 10. FinTechs
Now, are these small banks that are inquiring?
These are FinTechs that are looking for a sponsor bank.
100%.
And
They
here's
can't
the
find
thing, we've had to really triage that and trying to determine the types, right? Because amongst the sponsor bank, the association members, right, we've got all sorts of different views. Some want the lending side, some want deposits, right? Some want larger or smaller programs. Some are looking for, you need to have this much in funding or whatever it might be. But what's interesting is there is a black hole at the startup FinTechs, right?
That's what I'm
So
talking
if
about.
they're pre-launch, let's say, they could be very well funded. They could have, I've seen some things, that are like, wow, I wish I built that, really cool things. But since they're pre-launch and they don't have a sponsor bank, no sponsor right now wants to pick them up. So, we've got a huge black hole in sponsor banking and we need more sponsors.
Something we do, I think, is really cool. It's like anything, you do something and then you get better at it, right? the categorization of how these guys operate, what we want to call them. Are they an elder, or are they a this or a that, right? And what type of functionality is that, and where does it actually fall to the balance sheet on the bank? Is that a deposit side issue or an asset side issue? So this categorization helps do like a Match.com a lot better. So you've got a curated matching process. And to your point, the reason I even bring that up, to your point about bringing in different regulatory and sandbox opportunities, it's not one fits all. So you've got to be able to say, okay, we're going to classify this way, like insurance versus banking, or whatever it may be. However simple you want to make it, or as deep as you want to go. But I'll guarantee you, the first thing you come up with won't be, you'll change it eventually, right? But as you evolve, that's a progress in itself. And that really is where I think this thing is self-leveling to a certain point, is you got to start somewhere, categorize information the right way, or categorize your outcome that you want to achieve, and then learn over time and let these things evolve a little bit.
But
What you end up with 10 years from now is damn near perfection. And everybody would say, God, the guts it took to start that thing, right? And that's where you're at. You're right at the forefront of that, saying, we'll start.
Yeah, and to Joe's point, you could think of the specialization, right? I mean, look, I don't think anybody's going to say, take your average community bank that's doing nothing today and they could just dive in. No, of course not. That's a big jump. But everybody's got a niche, to your point. And if that niche was auto, they could probably reasonably dive in with some new startup auto FinTech, and I bet they'd be better than the rest of us, right? So I guess my best advice is lean into what your niche currently is, and you find that it's not much of a...
That's what we do, and Adam does a great job of really overseeing the network to make sure when we have FinTechs that are industry focused, we take them to the banks first. And we've had, that's probably our best hit rate.
Well said.
Well, I don't know who's overseeing your, picking of parties, but we were talking about that earlier, about just building an ecosystem of, it's almost like a flywheel of connectivity. You've got a really good oversight of all of that.
We're very thematically driven, and we're looking at the headwinds and the opportunities.
What's your thesis there? What do you like? What do you not like?
Well, right now, I think in the last year, in our banking sector, we've really been looking at deposit aggregation, deposit distribution. We've been looking at loan participation. We've been looking at direct onboarding for embedded finance and BaaS platforms, because if banks are committed and can control the process and the experience from womb to tomb, they're going to be so much easier regulated, and it's going to be a better partnership with the regulated authorities. I think those have been the three main themes.
It's like regulatory dashboards. Yeah. Just
data insight.
They're just regulators are cracking down on everything. CRE is a big area of focus. So CRE dashboarding and slicing and dicing, stress testing every asset, particularly CRE. That's a big area. We can be in a bear market in FinTech, but there's a bull market in compliance and RegTech and cyber. Some areas are just flourishing. Fraud.
We want to get small banks back into payments
Fraud.
through PayFac. Yeah. We want to get small banks back into kind of being able to take advantage of the sub $10 billion position they are.
How many banks aren't even principals, right, to be issuers? Right. Is a great example of those small incremental problems that could be worked.
Just being a settlement bank in itself, you could take money without doing a hell of a lot else.
But think about what we're not talking about. We're not talking anything about bricks and mortar. We're not talking about branch support, branch distribution. We're not talking about back office operations. We're talking about streamlining the workflows of the growth side of the market.
Loan syndication is an area we've really focused on, and I think the thing that was shocking to us when we went out and talked to our network of banks, it's all Excel spreadsheets. $50 billion banks, it's still Excel spreadsheets. Nothing balances when a loan comes due. The numbers are all over the place. It's manually really intensive, and there are software solutions now.
Right.
And within a couple of years, everyone's going to be on them. But It's a huge opportunity, particularly in this environment where banks cannot hold the assets that they used to. I mean, everyone's looking for more liquidity. Balance sheets can't grow. AOCI marks were huge this last year. So we need to syndicate more loans, and we got to bring in more outside capital. The private credit funds, Apollo grew 152 billion this year in new capital. So we got to have connectivity from the banks to let them continue to originate and sell them off to whoever. And it's a great business to be in, but it's a transition from where the banks have been.
Right. And I think when you look at just take lending, guys, and walk through sort of the cycle, every part of that's pretty archaic, from decisioning to syndication, as you mentioned, to even things like collections. Spreadsheets.
Renewal.
I mean, there's wicked opportunity.
Credit risk management, just monitoring the UCC filings on an ongoing basis of your customer. And then think about also connected to asset liability management. That is an old school business. People are still cranking numbers in the back office, all Excel spreadsheets. It needs to be in real time, particularly post Silicon Valley. Like, we've seen what happens when you're not monitoring in real time.
It's astonishing. I mean, we talk about all this for 2 or 3 years, I guess, in our little weekly meetings, that this could happen. But honestly, you didn't really expect that volume and that many of institutions to be behind, underwater on the bond side of the market. I mean, who the hell didn't see this coming, right? And so to find themselves in that position, I mean, what ALCO committee was sitting there just asleep at the wheel, right? Or a bad structure that was put in place. But these things, again, I go back to, how do you solve it?
We don't raise rates to sorry.
Right.
I mean, you raise rates in 18 months more than you have in 40 years. You might have an OCI problem.
I get so fired up. Like, it could be AOCI, it could be management. You can blame whatever you want. But if you raise rates the fastest in history and you keep doing that forever, you're going to break the weakest bank eventually.
Maybe you shouldn't cut rates for 20 years, to historic lows.
The raising of rates obviously is like duh. But the other part of this that's not really been addressed is, guys, this was a digital bank run. And we've been talking about a digital bank run is going to happen one of these days. Well, we're pulling out $1 million or $2 million a minute. There's no bank alive. Even the biggest ones we have today can't withstand that. Nobody can. Okay, so if you said, well, how do you stop that? Raise your hand.
But the digital bank, I mean, I lived it. We were the most exposed. I mean, not from a percentage. I mean, it was a wake-up call. It was a treasury discipline wake-up call. And in the venture capital world, as we are, we never questioned having our portfolio companies banking at the same place we did. It's fascinating.
It was convenient.
It was convenient, and they made it so easy, and it was frictionless, and it worked. It all worked. And the digital run wasn't. It was fascinating to sit in the middle of it. It was terrifying, but it was the VCs that triggered it. Right? Mm-hmm. The portfolio companies followed suit. They didn't, and it was fascinating to watch the outflows. What was it? Number 1, JPMC, 2 Wells,
and then
3
Brex
and Mercury were either 2 and 3 or 3 or 4 are not banks.
Right.
And that's where the money went.
Cleaned up.
Yep. Is that not amazing?
Wow.
There's also something to distinguish, though, on the digital run, is that you had First Republic and Silicon Valley get runs because they were so in touch with the venture capital ecosystem, whether it was the funds themselves or the portfolio companies. But the pressure is being applied to BAS across the spectrum to the companies. But a lot of the banks that are banking these FinTechs, they might have 100,000 customers. And that's different. You're not going to get a run on 100,000 customers overnight. You can get a run on that holding company or the VC with one phone call or one button. But it's much different. I don't think there's a full understanding that these FinTechs are built with hundreds of thousands or millions of customers, and they're much, much stickier. And I'll get, without naming names, one of the banks that we know is in trouble, has millions of customers, and they're in the news all the time. Nobody is taking their money out.
And it's grown.
Yeah, they're growing, but no one cares. These small customers just don't care.
Well, we did we started to do a study, put it this way. since we've got, obviously we have all the data on all the BaaS banks and know who the sponsors are, and we wanted to sit down and size that market, right? And so I think we made it through like a dozen when we finally stopped the biggest ones, just tallying numbers. You look at number of accounts, number of cards, et cetera, and it's like far surpasses the big four. Like by a
Well,
bajillion
the
miles.
growth rate is what you really need to focus
Oh,
on,
absolutely.
because
You bet.
the growth quarter over quarter
Huge.
is the fastest growing sector in banking,
Yeah.
without a doubt.
And so when we look at, I'd love to hear you guys' thoughts, just as you look at your community banks out there today, shouldn't we all dive into BaaS? I mean, isn't this, does anybody have a better idea? How about that? I mean, this is
I
the
don't.
future, this is the path. This
Well, what
is
the good thing
indirect
is
sales
about it
channel.
is community banks, you said it best at lunch, they can have a really solid little bank
Mhm.
that has fantastic intimacy with their customer, with payment, loan, deposit, and their cost of funds is very low, and they can retain most of that, but it's really, really hard to grow. If they layer in or slice in a small program that has 20, 30 million in deposits that they can be excellent at, we could then parse out, we could take 300 little community banks, 500 community banks, and parse out one or two programs each.
Bingo.
That's how I
And they can't unplug them. Once they're in, the runner, as Adam just said, the runner deposits don't take off. I mean, I'm involved in multiple BaaS banks. During the runoff, their deposits grew.
Right.
Right.
And because the underlying accounts
The network.
are the network, and they're tied, they actually are not going to go unplug their bank account.
Yeah, I mean, we can talk about concentration of deposits. Everybody talks about the concentration risk of deposits. Let's talk about ag loans. Holy cow, that scares the shit out of me, right?
Right.
And then we go to FinTech, and it's like, okay, BaaS banking, it's the greatest diversification of deposits.
100%.
Well
And
said.
this is my screaming point to everybody. When we come off of, now granted, I get the fact that we've come off the greatest deposit growth in history because we gave everybody money and they put it in the bank. But after that, and you just level this thing out a little bit, there's so much money that's set out there, and okay, now we've gotten back to the point where we need to talk about cost of funds. And I'll pay them 6%. Yeah, well, I'll pay them 6.25%. See if what we can do to wreck our balance sheet to bring in deposits. When there's people out there that will pay you to bring you deposits, it's the dumbest thing I've ever seen.
It's amazing. Greatest opportunity ever.
It is.
Yeah. And I think,
And it's not slowing down.
which
If they're
brings
lined
me,
up.
which brings me to the point or the question. For me, it's a point, but I'll stage it as a question of, is this optional going forward? If you said what we all call
Absolutely
BaaS or
not.
embedded finance, if it's instead of directly selling to your customers, it's selling through channel partners and indirect, right? Using your commercial customers to go out and get your end consumer customers, is that optional in the future?
Well, you think about
Because
this.
of the
If your
competitiveness?
grocery store, if they're able to bring in deposits for your bank through embedded finance,
If you
all
don't
that
do it,
grocery
somebody
store's
will.
customers, how many of those do you think are your bank or your competitor? Maybe they're Wells Fargo, maybe they're JP.
Walmart.
Hey, I'll take them. Let's go.
At HEB and big Texas grocery
At the
store,
end of all
they're
this,
offering 5%.
There isn't anybody at this table that's
HEB
not going to
products.
tell you this is not the greatest opportunity in the world for community banks. And I mean, we're huge proponents of saving community banking, and this is the way to do it. And everybody right now has got a dark cloud over this thing. Well, I don't know. What about the regulators? And you've said it a bunch of times. Regulation and things like this is actually a sign of maturity
It is.
in a market. They're not ignoring it anymore.
Which,
is a good
for
thing.
better or worse, but
And
they're not trying to stop it.
I think the word that we would all like to probably get out, and correct me, I don't want to put words in your mouth, but man, there's a right way to do this, and there's an easier way to do this that's going to make your bank more profitable. Learn about it, hear about it, talk about it, and if you don't want to do it, don't do it. But putting your head in the sand is probably not the right move right at this moment in time, as we're changing different kinds of offices.
Well, it's also a great time, and Adam can speak to this, if you look at the value of banking stocks. I mean, what better time, because they have plenty of cash, their stock price is down. What better time to innovate and invest?
Yeah, I mean, my background's as an investor, and if I had a fund to invest in 5 years or 10 years, forget about the quarterly changes in earnings, I would only invest in a tech-forward bank. I might only invest in a bank focused on embedded finance. I mean, because I think that those banks have an opportunity to maybe trade at 3 times book, 4 times book, 5 times book. I think that's where you're going to have the high multiple stocks, and the rest. I'm not going to say the rest are left for dead. Not everyone has to be in embedded finance, but I think you're going to see money flow to those banks, and then that's where they'll roll up the rest of the banking sector.
We have personally, we invest, we have our own Tanner and Dave Bass Bank Index that we work off of, and we work off of the direct model, and so we spread amongst those, few dozen, and we've done very, very well over the last few years. Well said. I like it. Joe, your call?
I mean, look, I see it as the only way for growth. I mean, I'm not talking about survivability. I think it's going to be really hard. You're going to see a lot of consolidation. You're going to see a lot of forced consolidation. Not a bad thing. I mean, in markets, when markets are crazy like they are now, but most of this is not accretive. I mean, it is sacrificial.
Right.
And I don't want to be, if I'm running a bank, I don't want to be the sacrificial bank. I want to be the growth bank that has value, and I want to take and innovate, change. And I think that's just a wake-up call.
Yeah,
And it starts at the boards, starts at the SLT, the senior leadership teams. Come check it out. You got to be curious first before you even hop in. You got to study it, and it's really interesting. Adam's brought me a couple really interesting CEOs to talk to, and others have, they're studying and they're watching, and they're nervous because it's different, but they're learning, and they want to get into a learning network, and they want to look at these companies, they want to study them, and they want to talk to peers. Like our annual conference, the level of engagement with our banks and our fintechs is unreal. How many one-on-ones did we have this year?
600.
600 one-on-one meetings, and that's the bank choosing you on the lineup card. That is not you're on the list.
That's right.
And they're booking the meetings, and it's unbelievable to see who was top 10 on meeting request, and it was.
We get the same thing over here, and people are like, the bankers will engage. I'm like,
they are.
Have you not been paying attention? They're engaging more right now than they ever have. And here's the thing, y'all. We all know that we're not going to see a bunch of mergers and acquisitions until we see stock prices go up on the banks. So
Unless it's
here's your tip of the day. Go ahead and invest in bank stocks, because there's going to be more mergers in the future. So cat, horse, mouse, court, all that kind of thing. All right. Once that happens, and we go through this next merger cycle, this is like my 5th one in my life. And everybody's like, the sky is falling, and it's really who's well capitalized and who can't make money, right? And so the panic moment, and we need to sell our bank when the rates or the price to book is good, which leaves fewer banks with this gigantic opportunity. There's going to be this moment in time, just like we all know, bank stocks will go up before we have bank mergers. There's going to be this moment in time where there's not that many of us left, right? Which makes the value of that charter significantly more important.
Because they're not issuing new charters. I mean,
Right.
those days are over. The de novo charter.
But you kind of play that hand out, and it's like, what kind of dumbass wants to sell their bank?
It's the best time ever. I mean, everybody from the FinTech side or the middle, like the rest of us, is like, this is the best time I can imagine. It's really exciting. There's great opportunities.
But it's back to your point earlier when we were talking about this new kind of offense, right? Those coaches are the ones that are going to win. That's it. They're going to beat the hell out of everybody else until they convert from the wishbone to the spread. And that's the way it's going to be. And they're all going to be throwing the ball. That's the world we're in right now.
Yep.
Well, look, I want to thank y'all big time for having us to Nashville. We've eaten good barbecue. We had some oysters. We're going to Joe's glass blowing studio tonight.
Yeah, it's gonna be awesome.
Yeah, you can find me at the
My
bar.
lips are burned all the hell that'll be.
Yeah, so guys, we're already having an awesome time. Appreciate you guys. Appreciate everything you do, and I think it's so cool what we're all experiencing. We're all very different here.
I think for the folks, I mean, this is where there's an active partnership out there that's incredibly collegial right now. It's awesome because we all service different pieces of the market, some the same, different geographical regions, some the same. But it's fascinating to see how we're all in the same boat right now, and we're starting to row together. And I'm a big believer in markets and efficient markets and capital markets, coming together to be efficient and it's. I guess I say the capital is like water. It flows to the source that needs it most, and it finds its way. There's no water in the desert for a reason.
Right.
But I'm watching this industry.
Well said.
Capital.
But that was really
I
a
love it.
smart
I
one.
completely agree with it.
But capital's flowing to this industry. Like,
Yeah.
it'd be different. We're all sitting here and we've got all these headwinds and overhangs and pressures and friction, and look how much capital
It's opportunity.
is flowing to it, because capital's smart. They see that, wow, this is where the growth opportunity is. So I do appreciate the partnership. I appreciate the ability to share openly and share notes and share it publicly, share it privately, because if there's ever a time for us to be arm in arm, it is right now.
Yeah, make no mistake, everybody. We are all about promoting banking, not the big four banking. None of us want to live in that world, and I think we put our money where our mouth is as far as trying to find ways and offer ways up. We're not the people saying do something or you're going to die. We're the people saying here's some choices of things to do. We've actually put them together.
Because
for
big
you.
four banking's fun, but it doesn't. Their algorithm doesn't fit this side of the market.
Just don't run the wishbone.
Right.
Gotta run
I
the
love this
spread.
guy. That's it, man. Yeah, lean into the future. How about
I was
that?
at the University of Florida in the 90s when Steve Spurrier was the coach, and he reinvented the SEC. You either got run over by him or you learned to change your offense. So bankers need to do the same.
That's exactly where we are. It's such an opportunity right now. So that's the part that I think is somewhat glass half full on the inside of yourself, right? And then glass half empty when you see what could be. And I think as an optimist that we all feel that, gosh, everybody should run faster. And to your point earlier about, bankers are engaging in this, and they're engaging in it in numbers that we've never seen before. And I don't know why in the hell everybody is not talking about that. I mean, we hear it. We're the guys taking the phone calls, and you guys too. And it's like there is a wave happening.
Let's think about what happened in banking this year. I think there is a lot of fear, and it's earned. I mean, there is an overhang if we can get through this. I mean,
But that's all anybody wants to talk about. They're
Yeah.
not actually talking about what's really going on now, is that bankers are seeing this, the FinTechs are lined up.
Said
There's
a different
big
way,
wave coming.
it's like everything I see in front of me is bad, but I feel more excited and hopeful than
Right.
ever. And it's like, okay,
Right.
maybe the narrative's a little broken. We got a lot of good things going on.
It wasn't a banking crisis; it was a crisis of a couple banks.
Yes.
Right.
Yes. And a crisis of
Well
the
said.
media.
But
right?
that should make all these numbers and all these things that we see way down. And like we were talking earlier about 133 with 80 in the wings. I mean, that's the 80 we're counting.
Yeah.
I'm sure there's more we know of that we don't know of. And you're talking about almost a doubling in size. in the
It's something
mass
everybody's
market.
not talking about.
At
Sponsor
this
banks are
moment in
going
time,
away, and there's more coming.
Everybody thinks it's really retracting. It's not.
We just need them to build the rails the right way.
Bingo.
Right?
Yes.
They've just got to be regulatory efficient, regulatory, thumbs up. Like the technology is here. We can do it.
Well, that's where we team up.
Yep.
Love
Up
it.
there.
Anybody
All
got
right.
any final thoughts?
no, thank you. Looking forward to tonight.
I am super looking forward to it.
All right.
Thanks for having us.
Thank
All
you,
right.
guys.
Thank
Uh-huh.
you.
See y'all.
See ya.